Most people come into trading believing that success depends on finding the perfect strategy, secret indicator, or guaranteed setup, but the uncomfortable truth is that fear and greed decide most trades, not strategy. Because even the best plan collapses when emotions take control. And trading is not really a battle against the market, but a battle against your own reactions to uncertainty. And fear appears the moment price moves slightly against you, making you close trades too early, panic sell, or avoid good opportunities entirely. While greed shows up when a trade goes in your favor, pushing you to hold too long, overtrade, increase position size, or ignore exit rules. And this emotional cycle repeats over and over again, creating small wins followed by big losses that slowly destroy consistency and confidence. And fear and greed are so powerful because money is deeply emotional, tied to survival, self-worth, and identity. So every loss feels personal, and every win feels like proof that you are smart. Even though the market does not know you exist and does not care about your opinions or feelings, and many traders begin each day with clear rules and strong discipline. But once real money is on the line, emotions quietly override logic, and rules that looked simple on paper suddenly feel hard to follow in the moment. And fear often comes from poor risk management, where traders risk too much on a single trade. So even a small loss creates stress and panic, while greed often comes from recent wins, creating overconfidence and the belief that the next trade must also win, leading to impulsive decisions, larger positions, and ignored stop losses. And social media, news headlines, and constant market noise make everything worse by triggering fear of missing out during fast price moves and panic during sudden drops, pushing traders to chase price instead of waiting patiently for high-quality setups. And over time, this emotional decision-making breaks discipline, destroys consistency, and turns trading into gambling. Because success in trading does not come from one big trade, but from hundreds of small, controlled decisions executed correctly over time. And professional traders understand that strategy is only a small part of the equation, while discipline, emotional control, and risk management matter far more. So they focus on following a repeatable process instead of predicting outcomes, accepting losses as normal business expenses instead of seeing them as personal failure, and they define their risk, entry, exit, and position size before entering a trade to remove emotional decisions as much as possible. And they know that losing trades do not define them, but breaking their own rules does. And the biggest shift happens when a trader stops trying to be right and starts trying to be consistent. Because markets are uncertain by nature and no strategy works all the time. And traders who succeed long-term are not the ones with the most complex systems or highest win rates, but the ones who can stay calm, patient, and disciplined when fear and greed are strongest. And when you learn to recognize emotions without acting on them, trading becomes calmer, more mechanical, and more sustainable. And this is why fear and greed decide most trades, not strategy. Because mastering trading always begins with mastering your own mind.